Creative Media and Community Trust Corp, trading under the ticker CMCT, is currently experiencing a massive surge. The stock is trading at $9.35, reflecting an astonishing intraday gain of plus 86.60% as of 9:26 p.m. IST on November 12, 2025. This is not a typical daily fluctuation. This is a volatility event driven by a core strategic move, and the market narrative surrounding this company has been completely upended today. The immediate expectation for any microcap REIT that sees this kind of pop is often a heavily shorted stock being squeezed or a one-off, non-repeatable good piece of news that will fade by the next session. However, the reality of the situation for CMCT is far more substantial and structural, suggesting this move is the market's delayed, explosive reaction to the company finally clarifying its future direction and simplifying its complex balance sheet. This kind of single-session move is a clear signal that the market was assigning virtually no value to a significant part of their business, and the announcement of its divestiture has acted as a powerful catalyst for a complete repricing, forcing a massive, sudden correction in investor perception. This is the ultimate tension between expectation and reality, playing out in real time on the Nasdaq. The consensus expectation for Creative Media and Community Trust has long been one of a heavily stressed small-cap REIT stuck in a challenging real estate environment, particularly with its exposure to the office sector. Investors have generally viewed CMCT as a complex, messy stock, a sentiment reflected in its consistently low trading volume, a market capitalization that only recently was hovering just under $4 million, and a share price that has fallen off a cliff over the past year, at one point trading near $97.47, now bouncing off a 52-week low near $4.03. This massive year-over-year decline underscores the profound skepticism and pressure the stock was under. The overall REIT sector, especially for office and complex mixed-use players, has been under a cloud due to persistent high interest rates and the structural challenges of remote work. Even though the broader REIT indexes like the Dow Jones Equity All-REIT have shown some recent resilience, particularly in niche segments like healthcare and hotels, the office component, where CMCT has significant holdings, remains a major anchor. This is the common ground. CMCT was a deeply discounted, high-risk play in a tough segment. The contrarian take, and the reality that has driven today's astounding price action, is the news, announced earlier today, that CMCT has entered into a definitive agreement to sell its lending division to an affiliate of Peachtree Group for an estimated $44 million. This is the insight that exceeds the market's expectation. For a company with a market cap previously in the single-digit millions, a $44 million transaction, which is expected to yield approximately $31 million in net cash proceeds after debt and transaction expenses, is transformative. The core challenge for CMCT was not just the underlying value of its real estate, but the heavy discount the market applied to the entire structure due to the complexity and low-margin nature of its lending division, which had been generating income from loan receivables, but also introducing credit and balance sheet risk. The sale is not just an asset disposal, it's a strategic simplification, aligning the company's structure with its stated focus on core real estate holdings, primarily its multifamily properties, and a streamlined Class A creative office portfolio. This infusion of cash, amounting to many multiples of its recent market cap, provides a significant war chest for debt repayment, further property upgrades, or strategic acquisitions, a profound shift in financial flexibility that the market had simply not priced in. The recent stock movement perfectly illustrates this sudden repricing. Yesterday, the stock closed near $5.01, and today's volume is exploding on the back of this news. The sheer volume of shares trading hands, which is many times the average daily volume, indicates a massive turnover, not just a small-scale short squeeze, though that element is certainly present given the prior weakness. We are seeing institutional money rapidly recalculating the net asset value per share based on a newly simplified structure and a much healthier cash position. The movement is a flight into the stock, driven by the realization that the book value per share will see an immediate and dramatic increase from the sales proceeds. This type of corporate action is often a preferred catalyst over organic growth for value-focused investors, as it instantly converts illiquid, discounted assets into tangible cash. This is a dramatic and necessary step for a REIT that was facing existential questions about its valuation and its future in a tough commercial real estate environment, which we know has been particularly difficult for office properties since the shift to flexible work models. To understand the deeper business context of Creative Media and Community Trust, one must look at its core operations. CMCT is structured as a real estate investment trust and is primarily focused on acquiring, developing, owning, and operating premier multifamily properties in vibrant communities, alongside Class A and creative office real assets. The business model is a mix. They generate rental income from these real estate assets and historically also interest income from their now divested lending segment. The company's recent focus has been on pivoting more heavily toward the multifamily segment, which is generally viewed as a more defensive and higher growth area in the current market than traditional office space. Their recent leasing momentum has been mixed, but they have executed significant office leases, indicating that their specialized focus on creative office spaces in key urban markets is attracting tenants, despite the broader malaise. This is an important detail. The quality of the assets may have always been undervalued, masked by the complexity of the non-core lending business and the overall negative sentiment towards the office sector. The financial health indicators, however, have been concerning. Metrics like a negative Altman Z-score, high debt-to-equity ratios, and previous significant net losses as seen in earlier reports like Q4 2024, all painted a picture of a company under financial strain. The market was punishing the entire entity for its highly leveraged and complicated structure. The reverse stock please proposals, which were recently approved by shareholders, were another indication of the severe pressure on the share price and the need to maintain NASDAQ listing compliance. All of these older reports showing a continuous struggle now serve as the backdrop that makes today's announcement so explosive. The expectation was continuous struggle. The reality is a massive, simplifying cash injection. The future outlook for CMCT now shifts entirely. The first scenario is the immediate stabilization and debt reduction enabled by the $31 million net cash. This capital can be used to fully pay off higher interest or recourse debt, significantly lowering the company's overall cost of capital and immediately improving its interest coverage ratio, which is a critical metric for REITs. This deleveraging is a powerful catalyst that will fundamentally improve the balance sheet strength, a factor that both traditional investors and sophisticated platforms like interactive brokers look for when assessing risk. The second scenario involves the company accelerating its pivot to multifamily, a move that the market generally rewards. With the excess cash, CMCT can now afford to invest in upgrading its existing multifamily units, like its partial office to residential conversion projects, or pursue targeted acquisitions in that space, which aligns with its long-term growth strategy. The third, more speculative scenario involves the company using a portion of the cash for a special dividend or share repurchase, an action that rewards common stockholders for the strategic cleanup, though debt reduction is likely the higher priority. The risks remain tied to the core real estate market. The office properties, even the Class A creative ones, are still subject to market cyclicality and the long-term impact of remote work. If the U.S. real estate market, especially in CMCT's core urban markets, sees further deterioration due to prolonged high interest rates, a key macroeconomic pressure, the underlying asset values could still decline, negating some of the positive impact of the cash infusion. Additionally, a new, simplified REIT structure means clearer earnings focus, which comes with its own pressure. Investors will now be hyper-focused on net operating income, NOI, from the core properties, and any operational missteps or leasing shortfalls in the coming quarters will be amplified without the distraction of the lending division. This is a moment of high consequence for management. They have been granted a new lease on life and a substantial cash runway. They must now execute on the core real estate strategy. The initial shock of the stock price reaction suggests the market believes they can. This entire situation is a great case study on how strategic simplification can drastically change the valuation narrative, especially for a complex entity that a lot of self-directed investors, perhaps using platforms like Robinhood for its ease of use, may have avoided due to perceived complexity. The sale has provided the clear, measurable catalyst that fundamentally re-rates the entire asset. For those who utilize more detailed planning tools, like the portfolio analysis features you might find through Fidelity or even a sophisticated advisor-assisted portfolio like Schwab Intelligent Portfolios, this move is a clear signal to run the numbers again. The historical valuation models based on a complicated multi-segment company are now obsolete. The tension between the prior expectation of a slow, painful grind and the current reality of a massive, instant capital gain is what makes this story so compelling and so instructive for anyone trying to understand